In general, I think they're expensive and a more cyclical sector. Nvidia, I think, is like ridiculously expensive right now. I just completely do not understand the valuation on this company anymore. And AMD, I still think is more on the expensive side as well. And yeah, I kind of think that this is a more cyclical sector. You know, AMD's revenue, they're projecting 20% revenue decline this year in the next quarter. What is AMD doing? I actually haven't taken a look at their financials recently.
So for people who aren't too familiar with these stocks, these are very hype stocks in the market right now because they make semiconductor chips and there's a huge rise in AI and a need for GPUs and things like that. So especially with Nvidia, they're seeing a huge demand for those CPUs, and investors are definitely piling into the stock. To add to what Daniel's saying, if you do regular valuation metrics on these based on the financials they're producing, it is pretty incredible how expensive they're getting. Now, what do we know, right? Maybe they're priced right and Nvidia is about to 5x their free cash flow, but it doesn't really look like there's a lot of margin of safety here.
Yeah, so for example, you can see Nvidia's revenue is coming down from its all-time highs. Looks like it is starting to increase again quarter over quarter. Trailing 12 months, though, revenue has come down. Let's take a look at their cash flow. Their operating cash flow in the trailing 12 months is also down quite significantly. Quarterly, oh, it looks like it was actually up quite a bit that quarter. That's nice. But in the trailing 12 months, it is still down to 5.64 billion. What is their capex doing though? So their capital expenditures are also, well, this is a declining chart, but it means that it's actually increasing. They had capex of 1.8 billion. What was it the last quarter? Oops. 509 million. Okay. So yeah, still elevated. And then that would ultimately mean that their free cash flow is dropping because operating cash flow is dropping and capex is going up. So free cash flow in the trailing 12 months now is 3.81 billion. So overall, this company's revenue is coming down in the trailing 12 months. Cash flows are coming down in the trailing 12 months. Capex is increasing in the trailing 12 months. But this stock has just rebounded from its lows here massively. It's up over 100. It's up 145% from its lows.
It's getting close to the $1 trillion club.
Yeah, and its price to free cash flow now is 186, which means it has a free cash flow yield of 0.5%. $708 billion company. So I think what's happening here is Nvidia is riding the AI wave because basically Nvidia is going to be the company that helps power artificial intelligence in the future with their GPUs. So I think people are buying up this stock for that reason. And now it's led to the company having very high price ratios.
And I've also seen the news, Daniel, going crazy about this. I feel like I can't open a news app without seeing 5 to 10 articles saying how NVIDIA is going to the moon and it's going to make you rich. So I'm unsure how much effect that's having. However, when I look at NVIDIA as someone who's been into technology a lot, this is my issue with it. And Daniel, we always tell people here on our channel, look at the business. What is the business producing? What is their moat? I think there's been a really good moat with semiconductor chips, and there's no argument around that semiconductor chips are needed. However, here is the issue. People are pricing NVIDIA like it's going to be one of the only GPU providers in the world for the next 5 or 10 years. Here's why I don't think that's true. One, we already saw Apple starting to make their own chips. Is that GPUs? Not exactly, but it's a step in that direction. I don't know if you guys saw this headline. Microsoft now is also announcing that they are going to start removing their dependence on NVIDIA and start developing chips in-house. This is a really big deal. And I want to make a comparison to earlier days of computers. Way back in the day, computers were super hard to make. Keyboards, mice, all that, they were really hard. Over time, as technology advanced and we followed Moore's law, those got cheaper and cheaper to produce. I don't know if that will happen exactly with semiconductor chips, but I don't feel confident that companies with a lot of money who are the biggest customers of these people aren't going to start producing these in-house. That's already happening. And then two, this is the pie in the sky tinfoil hat one. And I'll rest my case. Quantum computing is real. It is happening. No, it's not here now. No, it's not here for consumers right now. But I think it's really hard to make long-term bets on technology because things advance so fast and that rate of increase is only accelerating. And we see that. We're living it today. So I want to ask everyone in the chat, are you a semiconductor expert? Have you ever worked at or have an engineering degree making these or really understand the unit economics of putting these together, how much it takes another company to start making these for themselves, and what the future of computing will look like in 10 years? I'm going to take a bet that you don't know. I don't know, and I know Daniel doesn't. So just think really hard and deep. What do you know about these stocks that Wall Street and other people do not? And just be very careful out there when you're looking at stocks that everyone else is looking at. That is not financial advice. Maybe we'll be wrong and this will 10x, and everything I will say is wrong, but that's my personal opinion.
Yeah. I just see this is a very, very, very expensive stock.